So welcome to my new Still Step Strategy Guide series. This is Still Step Strategy is a totally new strategy which I developed 2 years ago, and it has been tested in live trading for 2 years, over thousands of trades. So this is the start of this is the chapter 1 of the a new guide series. This series will be limited to 10 chapters. I will cover all core techniques in Still Step, and chapter 1 will be available to public, while the rest will be available in my Discord server. So my Discord server is a small server of, at the moment, it's got over 500 members, and in the server we trade every day, we make calls, and we discuss charts, we analyze charts. We have live trading, we have guides, we have assignments, and last but not least, we have you can have your own personal channels for your practice and for our feedback as well. So in Still Step, I always talk about the flow of the market. We have to flow with the market, so that is the basis of this guide, and this guide will be on price action mainly. We don't really rely on indicators. A little background about myself: I'm a medical research scientist. I developed implantable medical devices, and in trading, so you and I, we all started, or maybe not you, but I started with no experience in trading at all. And I've been trading for 5 years. The difference between you and I is that I had to learn the hard way through losing a lot of capitals and time. And while you will walk the right path from the start without wasting your time and money. So, Still Step, it follows the law of nature. What kind of law? Where a structure is built layer by layer. I'm not talking about foundation of a building where you build building layer by layer, but I'm talking about, let me show you some examples. So a DNA is extremely long. Let's see if I can show you here. So the DNA structure, no, DNA packaging. So DNA is extremely long, and it gets folded into secondary structure and into tertiary structure, and again and again and again and again and again before you arrive at a chromosome, at a single chromosome. So the packaging is complex. So to synthesize a specific protein, we need to understand the packaging of DNA, unpack it, and target the sequence. Well, this sounds complicated, but we won't be using this. So this is just an example. So another example is that there are trading going on between neighbors. Yeah. So between two neighbors, there are trading going on. And then between two cities, there are trading going on between two cities. And then there are trading going on between two countries. Yeah. So to trade successfully with your neighbor, we need to know the market, the supply and demand of products, of the product that we are trading with, that we are selling, within the cities and within the country. Yeah, so that we make sure that our sale will end up in profit, and it will not, if it doesn't generate profit, then we don't get into this market, we don't sell this product. All right. So still step follows the same principle. Oops. We have layers by layers in the market. So let's use a different color. We have like I said, we have layers by layers. So in our first layer, this orange one, the market condition can be very different to the layer below it. And this layer would have a different market condition to the layer below it. So we have to understand all the market conditions between each layer, all of the layers. So by understanding all of the markets, then we will be sure that our trade, our entry will end up in profit. So that is still step. The simplest way to explain still step. That's the way, yeah. And still step depends. I'm showing you. Sorry to interrupt my explanation just now. I'm showing you this chart. This is Ethereum USD on 3-minute chart on Coinbase. So if we use a 1-hour chart, we can see step-like movement of the candles, and we will talk about that later. So let me show you an example of the layers that I was talking about. Let's go to a date. What date? May 10. So let's use a replay button. Wait, here, was it here? May 10. With this, what can we see here? It's a naked price chart. So maybe many of you won't be able to see a lot of information from this, but I can see a lot of information. First, we have this white trend going up, and from there I can draw a lot of white trends. So basically this is the market going down, up, down, and up. And we also have a layer above the white. So I'll mark it as green. And then we have another layer marked by orange. So now we distinguish the different layers or different markets. And how do I trade this? So I have to know where the market is going. So right now the orange seems to be going down, and the white is going up. The white, the green had a breakout. So it means that the market is now trying to reverse this green line. This green line was going down, and now it's trying to reverse up. So let's move a little bit forward. We can see that there is a breakdown. There's a breakdown of this this trend. And but at the same time, we can also see that the orange has a widening wedge. So widening wedge signifies that the trend, the momentum of this going down is slowing. So the momentum is slowing down, and there's a possibility that this will reverse. So the same goes for this portion here. So after the momentum is slowing down, we can see a bit of reversal here. So is this going to make a reversal? Then we have to follow the market step by step. So now the 1 hour is going down, and because we have this green trying to reverse up, with the 1 hour going down, we don't want to get into the market at this moment. So what I would do is that I would wait, and then we see at this moment, we see the white going down and then going up. So now when the white is going up, we can say that we enter, oops, it's here, we enter the trade here. So we can set the target around this area where there is a resistance, and let's see if we can generate some profit. And it went up. Yes, it went up. Is it at the resistance? It is about the resistance. So I can say that we should take some profit here. We can close our trade. We can close our long and take the profit. And now what do we see? We see the orange reversal. Orange is moving up. Oh, it went up some more, but it's fine. We took our profit. It went down with this candle. There's a huge selling pressure on this candle, so 1 hour is broken. It's moving down. So let's fast forward, and now we can see that the 1 hour is trying to move up again. So what do? We put a long. With stop loss at this point, and we will see what happened. So we have resistance here and this area. Let's put our profit, take profit here. It went down, so we hit our stop loss. Our stop loss was 0.5. That's still a win from our previous profit, so we are still in profit. And now let's see, it's still moving down, and we have a breakout. So with this breakout, we put a long. So this candle moved very fast because we are using the replay mode. So in live trading, it shouldn't move so quickly on the 1 hour chart. So just now we have our take profit around this region. So let's put it there. Yeah, let's put it there. So yep, we hit take profit. So we exit our trade. We exit our trade in profit with 3% profit. We had our stop loss. We lost 0.5%. So we are still in net profit. And now it went down. It went down quite a lot. So this is the reversal of the green line. Do we take this short sell? Do we sell here? No, because this orange trend is going up, so we don't sell here. Now we have another white. and then let's keep moving. We have another white, so we can enter this short, but how? Then we have to go on to the layer before white, which is purple. Now if we enter by purple, then we need to close our trade by purple. In this example, we are not going to take that trade. So it keeps going down, and we can expect something. I'm expecting a bear flag. That means this could be the higher low of the green line that is produced for the orange uptrend. So let's see. So at this point, I would be longing, but for this example, I'm not going to do that. And there's a breakout here. If we enter the trade, if we enter this breakout, then we have to set our stop loss far away at this bottom, and the stop loss is quite huge, 3%, more than 3%, so we don't take the trade. So let's wait for a good entry. Went up, went up. Now we have a white line formed. A white line breakdown. Looks like time for entry, but not yet. It's still the previous high. Yeah, that is the breakdown of the white, and now we are expecting a higher low made by the white, and at this point we can enter our trade. Actually, at this point we enter our trade. It should be lower. So during the breakout we enter the trade, and we put our take profit level at about this level, so 3.5% again, and it did. So it went all the way up, and now what can we do now? So we have orange line established, orange line up, and this green line up also. Right, so the green line, hold on, the orange should make a retracement, so it should go up a bit before continuing down, because we have this downtrend, long downtrend of another layer. So a higher ranking layer is going down. So this orange is just making, should be making a reversal, retracement up and down. So we don't expect a huge up, but let's see. It came true. So with this, we can't really take the short. We can't sell here. If we want to sell here, then our stop loss would be huge. Oh, sorry, not this one. Short position. Our stop loss would be huge. Would be 8%. So we don't take the trade with 8% stop loss. So let it make a lower high so that we can enter our trade. So it went up, the 1 hour came down, the white line came down, and then the white line went up. This is white line going up with a huge recovery, and that's the white line going down again. So with the replay, you see that it's a spontaneous up and down, but in live trading, it doesn't move so quickly. So at this point, you can say that we are at the lower high. So we have this, like this. There's a breakdown here. So this line went all the way up. And then there's a breakdown. So if we enter a short, if we enter here at the new candle, lower high, our stop loss is 1.5, and with the huge volatility, this is a huge volatility, we can expect a huge drop as well. So after a drop, the 1 hour breakdown, the white breakdown, we short that. I'm expecting at least to cover the bottom, and because this is the beginning of the green line going down, this can go very low. So this is green, so I expect let's say that it's going to take the previous low. So 10%. Can you do it? Yeah, it's going down, and no, it's not yet. So this is white line. And yes, it went down, so we took our profit here, and that's 10%. And well, it went down further. Like I said previously, the volatility is high, so it went down further. So right, that's a simple example of our daily trading activity. And now I'm going to continue with the guide. So just now we explained that we have to always follow the law of the universe, which is there are structures, there are layers by layers of things, of everything that we do. So in trading, we trade between neighbors, we trade between cities, between countries. In technical analysis, we have it too. In technical analysis, there are lines within line. So there are lines. So there are white lines within a green line, and there are green lines within an orange line. So by understanding all those lines, then we can understand the market better, and we can make sure that we are going to generate profit. If we are not going to generate profit, then we don't enter the market. It's as simple as that. It's very simple. So trading is simple. So let me tell you what we need in trading. So trading is like a war. So to win a war, we need a few things. We need a weapon. A weapon is our charting tool, Tradingview. So those who don't have Tradingview, I have my referral link in the description, so you can have a look at it. And if you want a discount on it, then you gotta go through the trial and then after the trial, then you will get 50% discount. For Tradingview, we have to make sure that we are familiar with our drawing tools. So we have to make sure that we know how to draw lines, and we can label our chart with entry, exit, higher low. That's what I always do. Lower low, higher high, lower high. Okay, and we also have elite waves, harmonics that we use. And just now I showed you that we can mark our chart with our entry and stop loss, take profit. So, and this is another useful one, which is our measuring, our ruler. Our ruler is used to measure our stop loss. So how much stop loss we put, and is that a good point to enter or not? So the ruler is very important, and also we use it to measure this drop, 10% drop with a bear flag. So we expect another 10% drop. That's the basic, right? 10% here. So yeah, we can drop to 910 area. So we also have magnet. Usually I don't have it on when drawing lines. How I use it is that I use control key. I press down control key when I draw lines, and it will turn on automatically. Then I let it go and I draw my line. Right. So basically that's it. And on Tradingview we have different time frames that we will use. I'm not going to explain it here, not now. So next one, to win a war, what else do we need? We need our battlefield. We need to choose our battlefield, which is our market that we understand, that we are familiar with, or our exchange. So we have to choose our exchange. So what about exchange? So to choose an exchange, I would prefer one with high volume, and also that will not fail our order. Not fail orders, such as our stop loss order. So in the past I experienced an exchange that failed my stop loss and I lost money there, so please choose wisely. And also the exchange needs to be easy to use and fast in executing orders. Okay, yeah, that's about the battlefield. Choose a battle that you can win. Choose a place that you can win the battle. And next one is our strategy or strategist. So in a war we always have the commander, the strategist, the general that's smart. So that's me. So if you're going to choose me, I only teach still step. So still step is the most reliable strategy that I can find in the space. Still step depends on price action, not indicators. So indicators are really unreliable, and we depend on price actions only. So that increases our credibility and our accuracy in entering and exiting the market. So still step has highly or insanely high win rate and reward to risk ratio. So previously, in my previous example when I showed you my trade just now, I believe the stop loss was around 0.5 and our take profit was around 3.5%. So that's seven times of the risk. Our reward is 7 times the risk. And StillStep has also built-in risk management, which means it tells you where to set your stop loss and how much profit that you can expect to gain. And if you can't gain any profit, obviously you don't enter the trade. So the last one is what a lot of people are struggling with. It is trading psychology. So trading psychology is a wide area for discussion. So we have to trust our strategy. Yeah, like I've trusted StillStep. So we set a target. We set our target before we enter. We analyze the market. We set our target. And we set our stop loss. And we believe that with the stop loss, we limit our risk to 1.6. And we set a goal of 10%, and that or maybe 8%, and that is where we are going to take our profit. And we have to follow through our target. So we have to have the perseverance, the will to win, the will to make money. Okay, so this is not dependent on a random luck, a random gambling or market condition. So this is dependent. We set our target depending on what we analyze on the market itself. So that's trading psychology to me. So we set our target. So we have to know how to get there. For example, if with a strategy, we know that this is the white line breakdown, and with the white line breakdown after a dump, that is where we should be entering our trade. So that is and that trade will through statistics, it is proven that that entry will generate profit maybe 9 out of 10 times of the time. So we have to follow and we have to know how to get there. Okay. And I think that's it about how to win a war. So yes, let me check the time. It's half an hour. I have a bit of time left. So let's continue with the guide. The guide, I think the next step that you should be learning. So in this chapter, in the chapter 1, I'm talking about the basics of what you're trying to learn, what is technical analysis, and what you need to know, and what you're getting into, what is the risk, what's the reward in trading. Yeah, let me delete these lines. Okay, next one, I want to talk about candlesticks. So candlesticks, these are all candlesticks. So a lot of you, many of you know what candlesticks are, but some of you don't know what they are, or many of you don't know what they are, who are new to trading, who are new to technical analysis. They don't know what they are. So what are candlesticks? So candlesticks are basically this thing, this stick, and this one stick here on 1 hour time frame, that represents a time period of 1 hour. Okay, so this chart is Ethereum USD on 1 hour time frame, and you can choose any charts that you want. You can choose BTC USD pair, you can also choose Euro GBP pair, Euro USD pair, you can choose Tesla, you can choose any chart. Okay, so they all come in candlesticks. So when you see gap here, that means the day is over, the trading time is over, and the gap, the trading time starts with here. So what is a candlestick? Candlestick forms from the left to the right. So when a candlestick form, like the red one, for the red one, it starts where the body, the top of the body is. So this is the top of the body, and then throughout this, the life of this candlestick, it went down, or it went up first, and then it went down, and then it closed the candle here. So this is the close of the candle, this is the open of the candle. Okay, so this is the body of the candle, and this is the wick or shadow, or what else do you call this, the tail. Yeah, so what does it represent? It represents the supply and demand and the market condition. Okay, so candlesticks, this chart is showing you only the candlesticks, no indicators. This is a naked chart, and a lot of people don't know how to read a naked chart. A lot of people don't read at all the naked chart. A lot of people depend on indicators. A lot of people search for RSI, yeah, relative strength index. A lot of people use moving average. A lot of people use indicators. You can use indicators, but they tend to be very, very unreliable. They tend to go wrong a lot of times. So the only thing that you can depend on is the price action, is the price chart itself, because all those indicators, they are derived from the price chart. So why do you want to rely on indicators, right? You have to ask that yourself. Why can't you just look at the price chart and trade by using the price chart? Because the price chart will not lag. The price chart will not have delays. The price chart will not give you uncertainty. If you see uncertainty or sideways action, then you can go on to the lower time frame to see the actions that's going on within the market. So like I told you, there are layers of layers and layers of market. Okay, so if you see a market that's going sideways and you can't determine the direction, then you can use a higher time frame or a lower time frame to look at the direction. So don't say that you can't see anything from price chart. Price chart is the only tool that can let you understand what the market is doing. Okay, You can't see that from indicators. Yes, you can see that, but indicators can be inaccurate, can be wrong. So why do you want to stake your money in something that can go wrong? Does it make sense? Right. I'm going to end this video here. So to conclude this this chapter, this chapter is all about basics, and this chapter is about introduction to technical analysis, introduction to charting, to how to draw chart, how to draw on the chart, how to read the chart, and introduction, especially introduction to my trading strategy. So my trading strategy, we use price action, we use price chart, which is the most reliable, and we can enter our trade at the most reliable point. Yes, this on Monday, so today is Saturday, so on Monday I expect that this should go down. Okay, and that's from the point of view of the white line. Where is it? This white line. Okay, it should go down. So will it go further down, lower than this point? Then we have to look at another layer of the market. You see, so there are many layers of the market, and we can trade it just by looking at this naked price action. Okay, what else do I need to tell you? Right, join our Discord. All the guides, the second chapter all the way up to the 10th chapter will be in our Discord, and within the 10 chapters I will tell you all you need to know to make profit in trading. So that's it. Thank you everyone for your attention and for your time. Goodbye.